In a stressful, challenging year for investors, what do you need to know? What do you need to be reminded of to help you navigate this challenging time period? I've got 3 reminders you need to hear. That and more coming up. My name's Mike Bernard. I'm the host of The Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so if you're a pilot flying a plane, you've got all sorts of gadgets and gizmos and all that sort of stuff at your fingertips. However, you also have some gauges that show you your orientation, okay? Where your orientation to the horizon. And you think, hey, sun is shining, everything's fine. You don't need to worry about that. Just look, you can tell where you're at. However, that is there so that if you get off course or if you're unable to see or if there's a storm or something like that, you're able to see, okay, wait a second, what's my altitude? Where am I? What's my orientation? It's a reminder, it's there, that dashboard is there to remind you of where you are when maybe your bearings are a little off. Rough analogy, but hopefully you're following with me. During turbulent times in the stock market, your bearings can be off. It's very common to second guess and question everything that you've been doing with your investments, really everything you've been doing with your finances. That's natural. And yet at the same time, very rarely should you make any huge, significant financial changes and investment changes. Work with your CFP on your individual financial plan to make sure you navigate it appropriately. However, to help us all navigate these challenging investment time, this climate that we're in right now, I've got 3 reminders that you and I need to hear and heed as long-term investors to help us get through however long this economic storm or financial stock market storm lasts. The first reminder that you and I need to hear is that going back 95 years, since the Great Depression, the stock market is positive 72% of all years. That is reassuring, right? It's about 1 out of every 4 years that the stock market is negative. Part of why that's reassuring is during these tumultuous times, it can feel like, well, the stock market's only going to go down, or it's only going to go down further, or it will never recover. And we've had seasons like this before. I don't know, we're not on the other side of this. We might not be at the bottom yet. It could get more challenging before it gets better. But going through world wars, going through the Great Recession, going through the high inflation time of the early 80s, going through the tech bubble, all that sort of stuff, on average, the stock market is positive 72% of all years. Therefore, staying the course is often the most rewarding investment approach that you can take. 36% of the time, stocks go up at least 20%. 21%, they're up between 10 and 20%, and 15%, they're just positive somewhere between 0 and 10%. Guys, those are good odds. Those are good odds. I know we're facing some challenging investing times right now, but those are good odds. Only a 15% chance that we're going to see a 0 to 10% decline, but only a 13% chance that we're going to see a decline of 10% or more. We call these averages, average return of the stock market, since its creation's around 10%, to call it. And that average is made up of times where we have investment returns that far surpass that, but also periods of time when it underperforms that, right? And so, however, that average is about 10%. 72% of the time, markets are positive. Have that be a reminder to you to not second guess your entire approach or give up on investing during what is appearing to be a challenging year in the markets. Second reminder you and I both need to hear is that on average, in a typical year in the stock market, there is a decline from a high point to a low point of 14%. On average, we're going to see a 14% decline. On average, we're going to see a correction every single year. We've seen more than that right now, but that's a reminder that investing in stocks, they're always, even though it feels like, there's times that are really good and times that are really bad. No. Part of the experience is you're going to see some pretty wild swings from a high point to a low point and then recovery. That's fairly normal. And yet, even with that, just going back to, what is it, the last 42 years, 32 out of the last 42 years have been positive. That lines right up with that approximately 72, 75% of years in the stock market are positive. But take a look at the red dots. A lot of people call this the red dot chart. The low point of the year, the decline from a high to a low that we saw at some point during the year. 34% drop is the magnitude of from a high point to a low point. We saw that in 2020. Go back to the Great Recession, the financial crisis. We saw an intra-year decline of nearly 50%. Most people don't realize that there was a rally at the end of 2008, Santa rally, even a little bit one after the election, and so there was actually a lot of ground made up to still finish with just an awful year in 2008. But take a look at those dots. What I'm hoping you receive from this is, yes, right now feels unique. All bear markets have some similarities. They're similar lessons, similar principles, but they're all unique in their own way as well. I would want to remind you that, listen, volatility, ups and downs in the market are fairly normal. This one does seem unique, and we're into a bear market. However, ups and downs in the markets, turbulence in the market, this is common. It's a common feature of being an investor. And the third reminder, and this one is the most simple, and yet it really is the most difficult to apply. You probably heard those first two and you've heard them before or something similar, and you're like, yeah, that doesn't help me right now. Here's the third reminder. Bear markets are a great time to invest. You don't click away. Bear markets are a great time to invest. Just take a look at this stat. It typically, when you invest as soon as the bear market is reached, on average, those who do that experience a positive 22.7% rate of return 12 months later. You buy at the time when it's finally declared, hey, this is awful, right? This isn't just a normal pullback in the market. We've reached a bear market, a drop of 20%. This is bad. Many people start running to the exits. If you invest at that time, on average, you're seeing a 22.7% return a year later. Does it happen all the time? No. Again, that's an average. Sometimes it's much higher than that. Sometimes it's not. Sometimes it's lower than that. But guys, the only way to make money in investments is to buy low and sell high. And the principle that long-term investors like you and me use is, well, listen, I don't know whether the price will be higher tomorrow or next month or next quarter or next year, but I'm pretty sure 10 years later or 20 years later, or when I need this money in retirement, things are going to be higher than they are today, because that's how things work. That's how the economy works, continue to appreciate and grow in an inflationary economy. But buying when stocks are when there's blood in the streets, as Warren Buffett says, buying stocks when no one wants to, that's a way to buy low, even if it's temporarily lower, because all of a sudden we're seeing a shock or some sort of change or some sort of crisis or fear in the stock markets. Buying during a bear market, investing during a bear market, is a fabulous way to make money in the stock market. So I hope those reminders are helpful to you during this time when it's common that you're going to second guess your investment approach, that you're going to be tempted emotionally to make some pretty significant changes, either in your investments or in your entire financial life. I would tell you, take hold of these reminders, have them navigate you through this economic storm, and most of all, work with your certified financial planner. If there are some adjustments, some tweaks that you need to make, an adjustment in your strategy, they're the ones that have been through seasons like this before, have seen thousands of financial lives and helped navigate them, and they know your financial life as well as you do. So work with them to get individualized, specific recommendations to help you navigate this challenging time. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.